Hi, I'm Victor Cantore. I'm the President CEO of Amex Exploration. Our company is moving forward with development and also on the exploration side. Really exciting to talk about this. We now control over 500 square kilometers and 70 kilometers on strike on the Abitibi Greenstone belt.
That's a big land package, isn't it? We'll talk about that in a minute, though. Yeah, well, welcome to London. Good to see us always.
Thanks. It's really nice.
You've been traveling a little bit. There's a lot of conferences, but there seems to be a lot of money at them as well. That's the good news.
Absolutely. It's time to spread the good news.
Spread the good news, and you're in the right commodity, gold. But look, I think what we need to do, perhaps maybe remind people of the model, the business model here, because we've done one economic study. We're moving into and commence the feasibility study, etc. And that's the kind of cash generative component. But the news at the moment is you're obviously drilling a lot as well. So that will be presumably funded for now, but also all future exploration funded as well. So give us the headline business model structure and maybe some of the numbers involved.
Absolutely. So on the exploration side, we're fully funded. My VPX has a $25 million budget, fully funded. It's in the money's already in the bank, and that's going to be well over 100,000 meters of drilling, both on the existing property and also everything else that we just recently purchased on the Ontario side. On the development side, so we did put out a PA in early September. We're working on a feasibility study right now. The feasibility study, it's really, there shouldn't be that much of a difference between the two. I mean, the studies are pretty close together. So you're looking at the first 10 years. You're looking at 112,000 ounces a year. Within, our AISC is more or less around $1,100 an ounce. It's you look at today's prices. So the feasibility study is going nice. We're doing all the drilling. You need to do the condemnation drilling and geotechnical drilling. But soon we're going to get back to actually exploration drilling. So that's going to be fun.
The exploration is what you do best. I mean, and you've got all that package to get after 70 kilometers of strike is phenomenal. But it's this new business model. We've seen a few companies come at it this way, or versions of this, but yours throws off a lot of cash, certainly at today's prices. So people will be saying to you, are super excited, okay, how long does that process take? We're going to do a feasibility study. Do we need to do a DFS? Do we need to, what's the timeline look like?
Where the project is located really makes a big difference. We're right beside the town, so we have hydroelectricity, you have a workforce, you have supporting communities. We just did two presentations at both communities. The First Nation is really behind the project, so it's putting in the decline, the ramp. That we're waiting for permitting. That permitting process usually 3 to 6 months. We're 2 months into it, and we've asked for a permit for 40,000 tons. You'll be pulling out of there around a half an ounce. So by 2027, when you're getting your first ore from there, even if gold is at 5,000 Canadian, which we're well above that today, that's over $100 million that's going to come in, and by 2028 you're going to need that $146 million capex, but you've got that $100 million, plus you've got the $68 million of pre-production revenue, because as you're going down the decline, you're going to be getting stopes from there. So it's basically...
And you can sell that?
Absolutely.
You don't have to stockpile it, you can sell that straight out of the gate?
Absolutely, because we will already have sent a bulk sample to one of the local mills. So you'll just be sending that over and selling it.
So and what's the total? Are you limited in terms of the amount that you can put through? In terms of, I assume you've got some sort of permit to do so, right? So
the permit for the bulk sample, they're going to give you a number and we do it. So that's going to be the 40,000
But we don't know what that number, 40,000 tons.
Well, we've asked for 40,000 tons. We're pretty confident it's not a number
that's a small percentage of the total overall.
Absolutely, right, okay. Absolutely. Normally you're allowed to have 1% of your measured and indicated. In our case, we would have been able to ask for 80,000. So we came up for all the scientific reasons why we need the 40,000. Why we need the 40,000 tons. But then as you start production, now if we fast forward to the end of 2027, as you're sinking your ramp and you're going down the decline, it's all capex until you reach commercial production at that point. So we're contemplating doing 1,000 tons a day. So from that point to when you reach the 600 tons a day, that's when the capex stops. But from going from 100 to 600, all that ore, you're going to be taking down slopes, and you're going to be selling that.
Right. So as long as the permitting happens as hyped, you practically fund or solve for the kind of capex. There's small, quite tiny little capex problem that you've got in front of you. But you have, so that's self-funding. Does that also get added to any kind of exploration budget that you've got as well? I mean, how much do you think you can do?
So we have an exploration budget all the way till the end of 2026. That's funded.
Yeah.
Then when you start what we call phase 2. Technically, you have like 3 phases. You have the bulk sample, phase 1, and phase 2. So phase 2 is when you're going to put in your own mill, your own open pits. That's going to require $191 million of what we call growth capital, because you're in production now. You know, if you do the math here, you're looking at, you know, if gold is at $3,200, I'm just throwing any number here, like 3,200, which is still way below where we are today. You're looking at making about $2,000 an ounce. That's pre-tax. You're talking about $200 million US, which is $280 million. So the first year, if gold is at these levels, you're good. You've funded everything from internally, so I don't have to go look for 500, 600, 700 million dollars.
Yeah.
So you're de-risking it in 2 ways. You're de-risking it from a financial perspective, because all I need is that first money to get the initial ramp in, and then from a technical risk. I mean, a lot of the issues comes from your tailings management facility, which we don't need one. We're going to be toll milling the first few years, and even in our PA, we don't contemplate having one right now. And you know, that's really going to get your project going forward. The second thing is sizing the mill. After 4 years of toll milling, you're going to know how the rock behaves. You're going to be able to size your mill properly, and that's, you know, other companies, that's where they've had issues, the tailings management facility and sizing up the mill.
And have you, with the DSO, you know where you're sending it, or you've got options as to where you send it? Is that?
We have lots of options. We haven't finalized. We're not committed anywhere yet.
Yeah.
We are in negotiations with multiple. I mean, you have, if I just throw a lot of names out there for you, you have Casa Berardi north of us. On the Ontario side, there's the Halt Holloway mill. There's Northern Sun Mining with the Redstone mill. If I stay on the Quebec side now, there's many of them. Even our partner at El Dorado, the Lamac project.
Yeah.
So there's a lot of optionality there. So.
Right. And are you bringing consultants in to kind of do this feasibility study? You're explorers, right?
That's right.
So outsourcing that side of the economic study is fine, but you don't need to build up a team internally, do you feel?
We've actually gone in both directions. So I've got an exploration team, and I also have a mine building team. But look, contractors, it'll be the same contractors that are right now at the same underground contractors that are underground at Lamac, at Westdome, all these. It's the same companies that are doing the contract working, but. Eventually, we're going to bring in our own team. It's a question of bringing in the expertise in-house.
But okay, so what you're saying is the DSO component is relatively simple. Don't need to worry about it. But when you start to build, you would look to kind of build up your own in-house team.
In-house team, it'll bring down your costs.
Absolutely, right. I think that's where I was going with that one. So you multiple phases. I'm loving it.
Yeah. Well, we're de-risking along the way.
Yeah.
There's a cost to it, but I mean, you're really mitigating all the risks of a mine. I mean, you know, building a mine, like everybody tells me, you know, building a mine is something else. Yeah. So if you mitigate everything, I think it makes sense.
So remind me again with the revenue in 2028, we're looking to kind of start ramping up on cash flowing.
That's correct.
Fantastic. Love that bit. I love that model. Exploration. It's a big program you financed. $25 million is a lot of money. It's about 100,000 meters you're looking at.
Yeah.
What type of drilling are we talking about? What are you hunting for? Apart from gold.
Well, that entire belt, the Abbotsford, Hepburn, Normantal belt, because they call it different names in Ontario as in Quebec. But there's also a lot of VMS potential. I mean, we're exploring it for gold. We're going after the gold.
Sure.
But it's going
to be complex.
Absolutely.
There's going to be different type of ore bodies and different types of structures and fault lines. I'm sure. But do you know what you're walking into? Have you sort of targeted specific areas? Right. So what are you going for first?
So at the beginning, the property that we bought in the month of March, our geologists see a mirror image of where we have all the gold right now with the Beaupré block. They see the same type of rocks on the other side.
Right.
And then, if you leave it to imagination, look, what's the distance between Val d'Or and Normantal? It's probably about 90. Well, no, sorry, Val d'Or and Noranda.
Yeah.
It's about 90 kilometers or so.
Right.
On strike, we have 70 kilometers on strike. How many mines have been built, between that distance and now? And we're on the belt, like we're really on the deformation zone. So I'm really excited. I think there's a lot more to explore. On top of the fact that we are going forward with production and moving this project forward to production. And then your budgets, if I go further, I said, well, how are you going to finance your budgets, your exploration budget in 2027 with free cash flow? That's how I want to do it. I mean, when you're free cash flowing that kind of money, it's
non-dilutive.
Yeah,
we like that a lot. Yeah. But what do you think the market's rewarding at the moment? Obviously, you've got a little bit of everything out there at the moment. It feels like moving towards cash flow, funded build, phased build, a big exploration program now, and hopefully, ultimately, all the rest of your exploration funded as well. I mean, 500 million market cap, is that where we're at today?
That's correct.
Congratulations. Where does it go from here?
I want it to go a lot higher. I really do believe we're undervalued.
All under your roof, all under Amex.
Absolutely, just continue moving it forward. Reward the shareholders with everything that we've done, and they've been patient shareholders, but we'll definitely make more discoveries, and we'll definitely put this into production.
Good to see you. Good to see you. Like I say, one of the better stories that we've spoken to over the past few years, but it's certainly taken a sort of step change recently with just change of mentality about, well, what's it going to take? The market wasn't rewarding exploration per se. I think it is again, but you made that quite interesting change to the business model to say, well, let's take control back again, and let's look at what the future holds, and the future seems to hold a ton of cash at these prices.
Oh, absolutely. I mean, it's that thing where show me, right? So I am showing. 831,000 ounces, in which, I mean, I could say it's almost 1 million ounces, because you will get 1 million ounces in that Champagne zone.
Yeah.
At half an ounce per ton, beside a town, beside electricity, beside a workforce, it's
high margin.
That's what it is.
That's what it is. Victor, well done, sir. See you in the new year.
Great, thank you.